Welcome back. Well, this morning the global cues are good, but in Asia, actually, it'll be interesting to take a quick look at what's happening in Asia because news comes in that Japan has now slipped into a recession and has slipped into becoming the fourth largest economy in the world. It's lost its spot as the world's third largest economy. So things are not looking good in the Japanese market as we speak. Even Hong Kong is under a bit of pressure, down about 0.2%. And we do know the problems that are happening in China. So let's see how things shape up from here. But our entire research team is joining in to give us the list of top 10 stocks as we begin a brand new day of trade. So let's say good morning to them. Hi guys, good morning. Nigel, what are you looking at?
First, breathing a sigh of relief that the result season is over, right?
Yeah.
So NMDC is the last one and the numbers look good. Yeah, beat on the top line, beat on the operating profit, and the net profit was a little bit low, but that was because of an exceptional item. Now for NMDC, we already know part of the top line because the volumes are already known to us. That came in at around 11.4 million tons, but the provisional number was already out and we knew the growth was close to around 19%. So the beat on the top line is because of higher realizations. So that's one factor that played out. The realizations coming higher by close to around 22%. So some of that price increase that took place in the last quarter was already reflected. The second point is the costs were relatively lower. So when you have a top line growth of close to around 45% and the expenses don't go up by that much, that helps operating leverage as well play out. The net profit, as I said, it looks like a bit of a miss, but that's because of an exceptional item. Sweetener comes in terms of dividend. They've declared a dividend this time around of around 5.75 rupees. And keep in mind, quarter 4 will be even better because they've increased prices by around 600 to around 650 rupees in January itself. And that will reflect in quarter 4. So expect the stock to open up well in the green. But Abhishek, coming across to you. What about Muthoot Finance? How are the numbers?
Well, the expectation was of a weak quarter, but they have done better than that. So, in terms of AUM growth, it's grown at 23.3% YOY and about 3.2% sequentially. Estimate was about 22% growth YOY and about 2% sequentially. The gold AUM growth is about 21.8% YOY and 2.5% sequentially. This is led by the gold pricing. As you can see, that gold price rupees per gram is at 5,793, which is up about 15.3% YOY and about 9.5% sequentially. They have been able to hold on to the net interest margin on a sequential basis, which has come in at 10.88%. In terms of home finance subsidiary, the AUM growth is robust at 26.5% YOY and 10.5% sequentially. Asset quality over there has improved as gross NPA ratio is down to 3.5% versus 4.3% in the previous quarter. In terms of Belstar MFI, the AUM growth is robust at 65.5% YOY and 12.2% sequentially, but we are seeing pain in the rural economy and MFI asset quality is impacted. Gross NPA ratio of Belstar MFI is up to 1.88% versus 1.48% in the previous quarter. In terms of their PNL, overall Muthoot Finance PNL has beaten our poll both in terms of net interest income as well as the PAT. Back to you.
All right, Abhishek, thank you very much for that. Some of the companies, of course, we will be speaking with a little later on the program. AB Fashion is the next one we are focused on. Mangalam has got the numbers. Mangalam, morning.
Good morning. So, the numbers year on year were led, of course, by the festive season and general acquisitions of the company that they've made with regards to brands, etc. So there was a 16% jump in the revenue. There was a 27% jump in the EBITDA. So margin expansion, however, was a positive. But the company reported a net loss, and that's largely because of increased leverage. So the finance costs of the company have increased from 132 crores to 245 crores. While there was margin expansion in both their lifestyle and pantaloons brand, and ethnic business grew well for them, 43%. What wasn't very good in terms of growth was the athleisure and innerwear segment, which were growth drivers of the company earlier itself. The big trigger for them, however, will be the clarity on what happens to the 1,400 crore worth warrant issue that was made to GIC about 18 months ago, convertible at 289 rupees per share. This is the time when, there would be some clarity on conversion, whether those funds come into the company or not. So until that happens, the stock would perhaps remain in a range.
All right, thanks a lot for that. Well, Ekta has a couple of pharma stocks on her radar. Glenmark Pharma actually reported a big loss this time around. Ekta, tell us more.
Well, yes, both the stocks with G and last year of earnings season, so I totally feel Nigel's sentiment, finally done with it. But nonetheless, for Gland, I expect the stock to probably be in the red, but the commentary was positive, so maybe the stock could see some amount of recovery. So the revenue was up around 65% on a year-on-year basis, better than estimates. The margins, however, were disappointing at 23% versus 30.9%. And the profit was better than estimates as well. But Cenexi, one of their recent acquisitions, reported a negative EBITDA of 17 odd crores versus an estimated profit of 50 crores according to analysts. Now, the commentary was positive. Like I mentioned, the US sales was up $11.3 million Q1Q. It surpassed $90 million, which was the rate in Q3 of FY22. Legacy business margins was at 34%, so it's recovered back to those levels. Elara raised the target price to 2057. Nomura has a neutral target price of 1570. Now, Glenmark, disappointing numbers. Revenue down 28%, EBITDA loss 208 odd crores, net loss 351 crores, which is widened on a Q1Q basis. The numbers did decline due to a one-time impact on the India business as the company changed their distribution model. So India declined over 75% on a year-on-year as well as Q1Q basis. But North America was down 9% year-on-year as well because of US-based business pricing pressure. Adjusted growth, if indicated, was around 9% and adjusted EBITDA loss was around 144.4 crores. But I don't think that's going to assuage concerns at this point in time. The call is at 8:30 a.m. Maybe the commentary would.
Okay, all right. Thanks a lot for that, Ekta. Let's go across to Mangalam. He's here to tell us, I think, about a couple of more stocks that he's tracking. Mangalam, you're looking quite happy after yesterday's Valentine's Day. So good on you, mate. But tell us about these stocks.
Yeah, my Valentine's Day was great. I went to the gym and held a couple of dumbbells. That's all that people do these days. But tell you about a couple of numbers. Sun TV, decent numbers coming in. Optically, it looks like just a 4% revenue growth, 7% net profit growth. But remember, this is a time when a lot of the advertising spends were shifted towards the Cricket World Cup itself. So in that, if they've managed to get in 4% revenue at a time when Zee reported a 3% decline in ad revenues, this should be a positive. And also, more importantly, as we move towards the fourth quarter and the first quarter, the chatter around IPL increases, and that typically does well for Sun TV. Gateway District Parks, good numbers coming in out here. 15% growth in their revenues. The margins compressed a little bit, but at 25%, there is no complaint. The net profit, of course, was aided, a 16% jump is what we saw out there as well. And that was because of lower finance costs. Importantly, the rail business of the company grew 20.6%. with a volume growth of close to 15.7%. CFS business not doing too well for them, but that's exactly how the industry has panned out over the last few quarters as well. They've reduced their debt too, so see some green on Gateway District Parks.
All right. Well, thanks a lot for that. So those are a couple of stocks. Let's go back to Ekta to find out how Narayana Health did this time around. Ekta, over to you.
Well, overall, a little disappointing, you'd have to say, if you look at it, especially on a Q-on-Q basis. So the revenue was up around 7% year-on-year. Remember, they've been clocking double-digit growth otherwise. And hence, the 7% growth was a disappointment as compared to the growth rate previously. Margins at 23.2% versus 22.6%. So marginal expansion. But on a Q-on-Q basis, there was a bit of a flattish trend. Profit also higher. It was aided by the other income, which was higher this quarter. So overall, you'd have to say maybe a little subdued because Q-on-Q, the revenue was lower, the margins were flat and the profit was lower as well. India margins were steady at 19% and the Cayman Islands operating revenue was 30.6 million versus 28.2 million. More of a working quarter, you would have to say, for Narayana, but the revenue growth trajectory as compared to the previous quarters has come off.
All right. Ekta, thanks very much for that. Crompton Consumer is the next one we are focused on. Upasana has got details here. Upasana.
Well, the company has reported a weak Q3 below the street estimates. Revenue saw an uptick of 12% on a Y-on-Y basis, while the PAT was down by almost 3% on a Y-on-Y basis. EBITDA margins of the company is where the stress lies, which was below the street estimate. It stood at 8.9% versus 10% on a Y-on-Y basis. Now, coming to the key segments of the company, the electric consumer durable, the revenue saw an uptick of 19%, but margins were under pressure at 13.6% versus 15.9%. Taking the overall margins down. Lighting products, the revenue was flat, but margins sharply expanded from 10% to 11.2%, which was not the case in the earlier quarters. Now, coming to butterfly products, the revenue was down about 6%, and this segment has logged a PBT loss of almost 1.9 crores. While the growth remained very strong in the key categories, but the main catch here is there is a 75% decline in the corporate sales, leading to overall 34 crore impact.
Okay, all right. Thanks for that, Upasana. Vivek's back with us. Vivek, tell us, PTC India.
Well, PTC India delivered its results. A lot of concerns were there regarding, the subsidiary, but that is now back on track. However, when you're talking about the core operating performance, Q3 was slightly subdued. A lot of one-off factors, seasonal impacts. So volumes in Q3 have actually declined. But let's have a look at the numbers. Revenues higher by a little over 10% on a year-on-year basis. Higher operating expenses, lower other income, and also the impact coming in from one-time booking of a loss has also gone ahead and impacted the EBITDA. So EBITDA is down over 10% on a year-on-year basis, margins lower by 190 basis points, and thereby profitability down over 13%. So 9 months FY24 is what the company has given the volume as well as the core margins. Trading volumes higher by 5% for the 9 months FY24. Core margin, much stronger, 3.52 paise per unit versus 3.28 paise per unit. Now, what actually impacted volumes in Q3? Company sales, lower cross-border volumes from Bhutan. Along with that, a long-standing issue with a one-time supplier. On the back of that, company went ahead and booked a one-time provision. And also, surcharge income went lower. This was mainly on back of cyclical factors.
All right, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow: NMDC, Muthoot Finance, Sun TV and Gateway Distriparks, while stocks with negative news flow: Aditya Birla Fashion, Pharma, Glenmark Pharma, Narayana Health, Crompton and PTC India. But let's also get a quick handle on what's happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action there. Manisha, hi, good morning.
Morning, Antonia. Thank you for that. Well, I'll start with the crude oil prices, where we have seen the prices decline because of a very large increase in U.S. inventories by almost 12 million barrels. Also, there is record high U.S. production at 13.3 million barrels per day. So even as there are tensions in Middle East escalating, as Israel now has struck on Lebanon as well, markets do believe that no crude has been impacted yet, as in sense of trade or production, and that is not adding any premium to prices. Actually, we have seen decline happen in other metals as well. That is because the dollar index is trading at a 3-month high. There is now just a 40% probability of a rate cut in the month of May after a very strong U.S. CPI data. So you have copper prices trading at a 3-month lows, gold is trading at a 2-month lows as well. Most of the metals for this week seem to be heading for a weaker closing.
All right, Manisha, thanks very much for that. So that's the commodity and forex update there. We'll take a quick commercial break here. We are back with Deepan Mehta of Elixir Equities with some fundamental stock check. We'll also connect with the management of Jyoti CNC. They came to the market, listed recently, stocks done very well. Numbers in focus for the third quarter. Stay with us.